Internet value transfer is now a standard expectation. Capital moves across digital borders instantly, with zero friction and zero delay. But walk into your neighborhood coffee shop and that efficiency vanishes. Local commerce is still trapped in archaic financial plumbing. Merchants are forced onto a payment toll road. Networks siphon off 3% of every transaction in swipe fees, while monthly rent for point-of-sale software drains their revenue before it even hits their account. Early blockchain technology promised to bypass these middlemen, but the first wave of solutions proved disastrous for physical retail. This raw data from Etherscan shows why. Customers struggled with wallet addresses and gas fees, and merchants were left with cryptic strings of numbers that made tax reconciliation impossible. Physical commerce needs blockchain efficiency, but it must stay in the background. Using Verra looks and feels like a standard Apple Pay transaction. Financial innovation only works if it respects the physical intuition of real-world commerce. Verra bridges this gap with two parallel tracks, starting with the consumer interface. Through account abstraction, users bypass private keys entirely. They simply link a social ID, and the protocol handles the cryptography in the background. This bank-grade NFC card serves as the physical anchor. It maps one-to-one with the digital account, allowing a user to pay with a single tap. On the other side of the counter, the merchant requires an equally streamlined system to accept that payment. Verra Business Lite turns any smartphone into a fully capable soft POS terminal. There is no bulky hardware to install, and no proprietary card readers to buy. By removing the need for legacy hardware, Verra allows any merchant to upgrade their financial infrastructure immediately. Let's look at the routing behind a single tap. Imagine a customer pays a $110 total, which includes a $100 base, a $10 discount, and a $20 tip. Verra uses a non-custodial architecture. It acts as the routing logic but never holds the merchant's money, ensuring direct settlement from the customer to the business. An atomic split logic handles the breakdown. The $90 base payment settles directly into the merchant vault. Simultaneously, the $20 tip follows a separate pathway. It routes straight to the staff's independent wallet, bypassing the merchant's ledger entirely. Moving the capital is only the first step. The business still needs that data to be readable and compliant. This smart receipt renders blockchain settlements as traditional itemized bills. It shows the original price, the member discount, and the tip as clear, human-readable entries. Verra achieves the precision of cryptographic settlement while maintaining the clarity of a standard itemized bill. For the merchant, this establishes a new economic baseline. The math is precise. There are zero monthly software fees. Verra only applies a flat 2% logic tax when the merchant captures upfront cash liquidity. On a $100 deposit, $97.98 land directly in the vault. The Business OS dashboard tracks standard charges alongside customer balances and minted B units. Here, the merchant operates as a decentralized reserve bank, issuing custom loyalty assets directly to their community. Merchants can also trigger growth outside the store by sending magic links via social chat. When a customer buys through these links, the digital cards auto-drop into their phone's native wallet, which then drives physical foot traffic back to the store. By standardizing this programmable layer at the physical counter, Verra is building the native settlement infrastructure for future AI agents. This allows autonomous digital entities to transact with local businesses as easily as human customers. Verra is an operating system that empowers local commerce to build and control its own sovereign financial reserves.